Hey, what's up guys, welcome back to another video on TradingCamp, and we're back with another ChatGPT testing video because we're going to be trying out a Fibonacci strategy that is created by ChatGPT, test out and see whether it actually works, and yeah, just try to improve the strategy and hopefully make it into a profitable one. So anyways, let's dive straight into this video. So if you guys watch my other videos about using AI to create day trading strategies, so basically I'm using this website called ChatGPT. So if I ask it to create a day trading strategy, it will create a day trading strategy for me. So in this video I'll be asking ChatGPT to create a day trading strategy based on the Fibonacci retracement, which is a technical analysis tool, and it's one of the tools that I use a lot. So it'll be quite interesting to see how it uses the Fibonacci retracement tool and see how this works. So as you guys can see, it's giving the steps that have been taken, and there's no indicators that is provided, but I'm going to try and improvise on the strategy that ChatGPT gave me and see whether it will actually work. So anyways, let's dive straight into this video. So here I have generated a response. So let's see what it says. Identify the trend by determining the overall trend. So let's settle this step first. We can use various indicators, because for this, in this case, I would be looking at the 5-minute time frame. I'm going to be looking at the EMA, the 50 EMA. So I'm going to be using the 50 EMA as a way of telling me whether the trend is in uptrend or is it in downtrend. So if price is in a uptrend, I'll be looking for uptrend movement. So if price is above the 50 EMA, I'll be looking for up movement, and if price is below the 50 EMA, I'll be looking for a short position. So next we have to identify swing points. So to look for significant swing points on the chart, so either when price has made a significant move either up or down, serve as reference points. So what it's trying to say is that it's probably looking at a movement upwards or a big movement downwards. So either ways, it'll be one of it. So draw Fibonacci levels. So if you guys don't know where to find the Fibonacci tool, you can click here, Gun and Fibonacci tools on the top left, and you can get this Fibonacci retracement. So what we see here is the 618 level and the 50% level. So personally for me, I don't use the 38.2% level, so the 50% and 61.8% level is where I use. So how does the Fibonacci work? Basically you draw it from the lowest point to the highest point, and basically what happens is that you're pulled back to these key levels at the 0.5 and the 0.618 levels, and it'll act as support and bounce off. So wait for price to retrace. That is what's happening right here. You can see we have an up move and we wait for price to retrace. Look for confirmation signals, bullish or bearish candlestick patterns, which can include bullish engulfing or bearish engulfing or hammer or shooting star, and I'll explain those later. And enter the trade, manage risk, monitor the trade. So I think this, from step 1 to 5, are the biggest key points that we must look at. So in this case, what we're looking at is how to identify the trend. That is our first step, to identify a big movement up or down depending on the trend, and drawing Fibonacci levels, waiting for price to retrace, and looking for confirmation signals. So for the confirmation signals that I'll be looking at this either having long wicks. So like you can see right here, we have this long wick to the bottom, which means that it's quite a bullish sign, and we have this bullish engulfing. So what do I mean by bullish engulfing is when the bullish candle engulfs the previous bearish candle. So the green candle is bigger than the red candle, so that's the bullish sign. And for what we call a shooting star is right here, where you can see that there's a long wick to the upside and the body to the downside. So this means that buyers try to push it up and it got rejected instead. So anyways, I think that's enough talking, and let's dive straight into this video. So I'm going to use these 5 steps. I'm going to copy it and let me put it in text so that I remember. Okay, this looks kind of weird, but never mind. So anyways, let's start with this video. So Okay, first we want to identify a trend upwards. So let's look here. What we're looking at is that we are waiting for price to break quite significantly above the EMA. So right here, what we see is that we have this big break to the upside. So we identify that the price has broken above the 50 EMA, is in the uptrend. So we're going to look to take positions in the uptrend. So that is our first step. Identify swing points. So you can see this is a very big swing point because it moves significantly up. Next step is to draw the Fibonacci retracement levels before waiting for price to retrace and look for confirmation signals. So right here we draw the Fibonacci level from the bottom to the top. So what we are looking for is that we are looking for this a bullish signal. So we already have this, we identified the trend and we already identified that it has broken up, make a significant point. We drew a level. So what we're looking at is this 0.5 and this 0.618 level. So we are waiting to buy at around these type of areas, and our fourth thing will be waiting for price to retrace, which already did to these levels. And our last signal is when we want to enter when we have a bullish signal. So we're waiting for a bullish signal, and of these candles right here, right, this would be a very bullish signal because we have this what we call the bullish engulfing, which this bullish candle is bigger than the previous bearish candle. So I'll enter right there at around the 618 level. Stop loss you can put below the recent swing low right there, and you aim for a 1.5:1. So there you have a winning trade. So same thing right here, we have another trade where we have this break below the trend. So we identified that it is broken below the 50 EMA. Basically what it means is that it's in the downtrend right here, and we are waiting for a big move to the downside. So you can see we have this move and we have this retracement. So we are waiting to draw the Fibonacci from the top right here to the bottom. So what you can see here is that we have this movement to the downside, a significant move to the downside, retracement, which is what we're waiting for. And now we are just waiting for confirmation signals. So here we have a confirmation signal right on this candle where we see that we have a long wick to the upside and a strong body to the downside. So that is a shooting star candle. So I'll enter right there. Stop loss you'll put above the recent swing high, which is right here. Put it right there and you aim for 1.5:1. So there you have another winning trade. So let's look. Here we have this movement to the downside. This movement up, you can also scalp it. You can see right here there's a move to the upside and retrace back. So let's see. So in this case you can see that we bounced off perfectly off the 0.5 level. So we notice that we have a break to the upside. It's in the upward trend because it's above the 50 EMA. There's a significant move to the upside. So second step is done. Now we're waiting for a retracement to either the 0.5 or the 0.618 level, which happened. And now we're just waiting for a confirmation of a bullish sign, which can be this big green candle right here. You can see that it engulfed the previous red candles. Stop loss you can put below the recent swing low right there, and a 1.5:1. So you can see this strategy is actually working quite well, but let me try and back test it in real time, see how this actually works, or if it actually is like quite a phony strategy. So look for a strong move to the downside before or strong move to the upside. That's our first key point that we're looking for. So here we have this move to the downside where we are looking for a quick downside break. So okay, we have this break to the downside, that's what we're looking for, and now we're waiting for a retracement. So we're going to draw from the top to the bottom. So you can see that price is below this 50 EMA, which means that it's in a downward trend. So we're going to look for short positions. We draw the Fibonacci line and wait for rejection at one of these levels, which do not happen. So once it does not happen, you want to ignore the trade. and just let it play out. And we have another break to the downside, so now we're going to wait for retracement. So we draw it from top to the bottom, and we're going to wait for it to reject at one of the lines. So same thing, we have the break to the downside below the 50 EMA, and now we are waiting for a retracement to one of the key levels, and that is a level that you want to take. So you want to put your stop loss slightly above the 0.618 level, and you have a 1.5:1. So what you see here is that we have this bearish engulfing where the red candle is bigger than the green candle, so that's a valid position. So this trade, yeah, kind of taking longer than expected, but managed to be a win. So as you can see, it's important to put your stop loss right above the 618 level, just in case. Give it some wiggle room to make sure that it will end up to be a win. So in this case, I would have taken another trade here. So I'm going to delete this trade, so that is actually one win right there. So we have this move back to the downside below the 50 EMA, which means we're in a downtrend. Draw a Fibonacci to this level, and we are monitoring the 0.5 to 0.618 level. What we see here is that we have this bearish engulfing where the bearish candle is bigger than the green candle, so we're going to take a short there. Stop loss right above 1.5:1. So unfortunately end up to be a loss, but no worries. Let's look for another position. So yeah, one win, one loss so far. So still no big trades. We're still waiting for trades. Right now it's all still bouncing above the EMA. Okay, so here we have this move to the upside above the 50 EMA, so we have identified it's in an uptrend. Draw Fibonacci, wait for rejection at one of the key levels. So here, yeah, we have the bullish candle. So this is the same trade that we have taken just now. So it was exactly how that I would have taken it. You see this bullish engulfing, and I would have taken that trade. So there's a winning trade again. So let's back test back over. Let's find more areas to back test. So now we're waiting a move. Okay, you have the downside move right here. Now we're gonna wait for the retracement. So this big significant move is what we're looking for. Now we're waiting for a rejection or bullish bearish sign. Okay, here we have this bearish engulfing on this candle at around the 618 level. Stop loss, you can put it right above at a 1.5:1. So now winning trade. You have this big move down. This move up. So right now it's still bouncing around, so I wouldn't perfectly advise anyone to take any trades, unless right here this might be a possible trade because it's a move up, but you can see that it's still bouncing around the 50 EMA with no clear trend direction, and in times like this you just don't take any trades. Okay, so here we have a clear move to the downside. It's clearly in a downward trend direction now, so let's wait. So I will draw my Fibonacci lines from the top to the bottom, and we are waiting for a rejection, so we're going to wait for a bullish sign. Okay, so a bearish sign, sorry. So here is our bearish sign. We have this big bearish engulfing. Stop loss put above the 618 level when the 1.5:1. And there we will be exited on this trade here. So you guys might be wondering, how did I just predict this big movement to the downside? It's just basically rejection based on these levels. So these levels are actually quite key, and based on the strategy that ChatGPT gave me, it's quite the strategy that it gave me is quite vague, but I improvised on it quite a lot, so hopefully you guys are able to use it. So I'm gonna say out the steps, and hopefully you guys will be able to try out this strategy. So what do I see from this trade here is that first step is that we're waiting for a big break to the downside so that we can identify the trend. So as compared to these trades where it's up down bouncing around the 50 EMA, we see that we have this big break to the downside below the 50 EMA, which is very important to identify that we're in the downtrend. Next up, we draw the Fibonacci retracement lines. There's the second step. Wait for it to retrace, and you can see that these are the significant points where we have this top point to the bottom point, and we wait for it to retrace. The fourth step, and now we want to wait for a big bearish confirmation or bullish confirmation, depending if you're taking a long or short position. So in this case, we have this bearish engulfing, the big red candle compared to the small green candle previously, and you want to put your stop loss above the key levels, either above the 0.5 level or the 0.618 level. So anyways, it's a pretty long video. Hopefully you guys enjoy it. Make sure to hit the like and subscribe button, and to check out my other videos as well. So thank you guys for watching, and goodbye guys.